And welcome back, everyone, to the RLT Pivot Podcast. I am once again joined with my amazing co-host, Mr. Dan Jansen. How are you, sir?
Doing terrific. Good to be back for another episode of the Pivot Podcast. We got a special guest in the house. We got Dennis Dick, which I swear I watch him and the show and the team every single morning before the market because the insight, I would venture, is better than anything you've seen on TV, CNBC, because they got a lot of talking heads that cover the same thing over and over again. But if you guys are not watching the Benzinga Premarket Prep show, you guys need to watch that live every single day. But Dennis, welcome. How are you, man?
Thanks for having me, Dan. Appreciate it. Tracy, appreciate it. Thanks for having me.
Absolutely. For anybody that doesn't know or hasn't seen you do the Premarket Prep, tell us a little bit about yourself, a little bit about your backgrounds, and kind of how you ended up even hosting that every single morning.
Yeah, so just quickly, we host a podcast that Dan's been talking about, Premarket Prep from Benzinga, 8 to 9 a.m. Eastern, Monday through Friday, where we basically discuss what's moving, what we see happening, and obviously breaking news. You know, a lot of times we get an 8:30 number, trading breaking news, and just talking about what we see, basically setting up your trading day. The idea behind that was probably came back, and I could bring into my history here. I've been with Bright Trading for 22 years, trading as a prop trader for Bright Trading, started in 1999 right out of university. And we always had a morning call where we would just discuss on the morning call from like 8:30 to 9 o'clock. All the traders would kind of get their heads together. At one time, we had 400 traders in the firm. And we get on call. It was hosted by a good friend of mine, Cash Coin. And I would help out with that call as well. And we just thought, you know, and Joel Elconin, who is my co-host on Premarket Prep, he started with Bright Trading as well. He was the manager of the Detroit office back in 1999. But we kind of thought that, you know, we do this call. What if we could bring this to the public, you know, like give information out there? Would there be an interest? And Joel and I started Premarket, it was called Premarket Info back then. And we didn't have very many listeners, like 50, 60, 80 listeners. It was probably most of my own company, Bright Trading, our own firm. But then we joined up with Benzinga, and we've been doing it now. I think it's 9 years we've actually been with Benzinga doing Benzinga's Premarket Prep. And we get anywhere, usually from 5 to 10,000 people that listen to that show a day. So we've got a pretty good audience.
For sure.
That's awesome. Now, you said you started 22 years ago, straight out of university.
Long time.
25 years ago?
Yeah, a long time ago.
Yeah.
So I could take you back to my young days. So straight out of university, I was actually my fourth year university, and I was taking economics and finance, and I had a friend of a friend who was trading at this company called Bright Trading. So I graduated in April of 1999, and I didn't know what I was going to do. You're a young kid, you know, you're coming out. And I thought, well, I'm probably going to I wrote my GMAT. I was probably going to go do my MBA and continue on my education route. But anyways, I had this friend of a friend who was trading at the Southfield, Michigan office, Bright Trading. And he was a professional day trader. And I was like, that is so interesting, because I had traded retail for my last 2 years of university, just had, you know, small money trading retail. And, you know, it was a bull market back then, so it kind of seemed easy. It was 1998, 1999. It seemed like you buy a stock and you sell it and you make money. So I kind of thought I was a genius at the time. And then, so I thought, what the hell? I started, you know, I went over there, met Joel Elconin, who's my co-host, met him at the Bright Trading office. And he said, yeah, so you come on in, you fund your account with, it was $50,000 at the time. So I had to borrow some money from my family. But borrowed the money, and and then joined Bright Trading literally in May of 1999, and sat down at that desk. I can remember there's about 20 traders in the Southfield office, and I'm like, okay, I sit here, and I was like, okay, now what, you know? And there's traders, and they're like throwing ideas around, and you know, it's bouncing around, but I really had no idea what I was doing. I thought before I came in I knew what I was doing, but I quickly learned that, holy cow, these guys are so far advanced, more than me. They literally, half of the traders in the Southfield office came from the floor. So it was, you know, internet, you know, trading was relatively new back in 1999. So it was just starting to, Bright Trading had formed, and a lot of floor traders had come in. And Joel, my mentor and trading supervisor there, had come from the floor as well. He traded in the S&P pad. So there was a lot of experience there, and that was a big benefit to me. And like I said, I quickly realized that after, being there for even a couple of hours that, oh man, I don't know anything. Here I come in, I think I know everything, and I don't know anything. And I remember just sitting there and I'm like, okay, well, I guess, you got to get your feet wet, right? So I make my first trade and I think I made $31 on General Electric. And I was like, oh, okay, well, I got a feel for this. This is going pretty well. And I remember that first week, and I think I made like $200 my first week, trading very small. So, and that's what they teach at Bright Trading. Just trade 100 shares, get your feet wet, get a feel for the market. Don't try to jump in and get rich right away. Just get a feel, get a feel. So I can remember I made like about $200 that first week, and I was like, okay, I'm starting to get a feel for this. And then the next week, I got hammered. And the next week, I got hammered. And I think at one point in time, I had the office record. I had 21 consecutive losing trades the one day. And I was like, how in the heck? It should be 50-50. I mean, you can buy a stock or you can sell a stock. I mean, how the heck do you lose on 21 consecutive trades in a row? I'm like, I completely suck at this. So anyways, but I grind out. By the time, I would say like 2 to 3 months in, my $50,000 had dwindled down to $46,000. So because I wasn't losing a lot, it was like losing $200, losing $300, losing $100, make $100 just by luck. So I remember about 3 months and I was down about $4,000. And I can remember I was dating this other girl at the time before my wife. And I actually was over at her house just for dinner. And, she's like, well, how is this day trading stuff going? And I was like, well, I'm learning a lot. And she's like, well, how much money have you made? And I was like, well, actually, I've lost $3,000. She's like, you've been working for 3 months straight and you've lost $3,000? She's like, you're an idiot. I could see her like, get rid of this guy. This guy's going nowhere. So, but I could feel that I was like, I went down and I was stabilizing. So like the next month, I wasn't losing anymore. So like you could see like the whole learning curve, like you lose. Then you got the learning curve and you're not losing anymore. And then I got to about the 7th month and I got it back to 50,000. So it took me about that first 6 to 7 months where I finally got it back. And then I was at that point where I'm back to break even. And then from there, I just, kept going up. And I actually ended up at the end of my first year, I made $8,000, which I was down for most of the year. So it means the last 4 months, I'm, probably made 12 or 13. And then the next year, I was able to make some significant money. And then I've been profitable every year ever since. So 22 years. It's been a good run. And obviously, I've enjoyed trading. And that's the history.
I think what you mentioned was a very key point for traders. I think people are trained through schools and everything. They're just trained to go to school. You get a job, you work, you make money. Trading is very different. So trading, you do have losses, right? You do have times, especially in the beginning when you're learning and trying to figure things out, really get a grasp of where you're at. There's going to be a struggle at some point, which could happen multiple times over a career, but especially in the beginning, there's that time where you kind of you want to throw the towel in. So just like the ex-girlfriend said, I mean, you're down, you go to work every day and you're losing money.
Yeah.
What kept you in the game? What really kept you motivated to continue? Because you cannot get to where you're at now if you give up.
No, fantastic question. And I think it's the fact that I was with other traders there and they're telling me similar stories at the time. So hopefully somebody that watches this interview that's struggling, they're 3, 4, 6 months in, might get, hey, here's Dennis Dick. He's been a successful trader. He's made his whole career trading. Here, he struggled in the beginning too. And I think I heard the same thing from a lot of traders in that office. They're probably like, okay, don't come in and expect to make money right away. And they say, at Bright Trading when they would bring traders in, expect in your first year to actually lose half of your account. They used to say that just in the whole learning phase. And if you're still sitting there, you're still losing money after a couple of years, maybe this isn't for you. Maybe you don't have the discipline. Maybe, it's not for everybody. Maybe you just don't have the overall skill set to do it. But I think that I started to feel like more comfortable fairly quickly. I mean, even though I was losing in those first couple of months, I was learning. Like I was like, okay, this is what you don't do. My biggest thing that I did wrong all the time was chasing. You like chase stocks. You see this going, you jump on the train. You see this going, you jump on the train, and then the train just turns, and and then you're on the wrong side of it. So you could see the little mistakes you're making, and then so maybe I moved into better setups and slowly and different types of trading, different styles of trading, learning from the other traders, being open-minded. But I think why I stuck with it is because those other traders had the same story, and I could see progress. Even though maybe I wasn't making money yet, I could see progress where I was learning. And And then obviously, from there, once you start making money, then you're starting to feel pretty good. And even though you could say, oh, your first 8 months, you make 8 grand, well, that kind of sucks. Should have worked at McDonald's. I learned so much. It was like better than my university education in those 8 months. And I got paid $8,000 to do it. So, I mean, that's, at the end of the day, you've got to get your feet wet. I mean, a lot of people say, oh, just paper trade. I think with the way Robinhood is, you can do free trading now, why not get your feet wet? Even if you're just trading with $500, get your feet wet, get a feel for it. Because once you have real money in there, the whole game changes. You can put anything on paper, but then you've got slippage issues. You've got other issues too, where there's just this whole psychology behind trading. I mean, trading is a mental game. And I know when I'm off, I'm struggling because then you're hesitating and you're not jumping on those setups that you normally would jump on. It's such a mental game.
That is so key. And now my biggest takeaway that I've gotten from what you've said so far was the fact that they encouraged you to play small right out of the gate. And I think that is key to some of the success that you had. So again, that's one of the advice that we would be giving as well, is you play as small as you possibly can. So it doesn't matter what you lose. It's a learning opportunity. It gives you that chance to get into it. But aside from that, what was probably the greatest struggle that you had to overcome during that first 7-8 months that you were learning to try and get into that profitable zone?
You know what the biggest struggle was? Probably after I had turned profitable. My biggest struggle was sizing up because I was so comfortable trading this 100 shares. And I can remember Joel from Premarket Prep now, but he's my trading supervisor. And then he's like, Dennis, you're starting to show some consistency. Start trading 200 shares or start trading 300. I remember when I sized up the first time, I'd get nervous and I'd be like, oh, I'm all of a sudden, it's like I'm nervous again, because I was so comfortable trading 100. Well, now I'm trading twice as much money, 200 shares, and I was like nervous about it. And I actually struggled for a long time to size up those trades, and I probably still struggle with that to a certain amount even today. Obviously trading a lot more than 200 shares, but sizing up at the right time and, getting, because I'm so risk adverse. I mean, a lot of people look at a trader and, I have one friend that say, oh, did you win money today? Because they look at the industry and they think we're like gamblers. And I'm like the exact opposite. I don't buy lottery tickets. I don't gamble. I'm like very risk adverse. And that's why when I put my money into something, I want a nice clean setup. Like I don't like to swing at pitches in the dirt. I'm swinging at pitches up the middle. And I'm probably almost too fussy, where I'm like always looking for the cleanest setup. And like, if I don't really like it, I just lay off it. And there's traders at our firm at Bright Trading that probably do better than me just because they hit everything. And they're probably just, getting, they're getting more hits for the simple reason they're swinging at more pitches. But I'm a little more conservative where I don't like losing money. I still don't like it today, and obviously there's going to be days you lose money. It just doesn't work out. There's going to be, trades you lose money on. But overall, I'm always trying to protect my capital. That's the biggest thing. So I struggled to size up, but eventually, I did, get bigger and slowly bring up the size. And obviously, then you can make some more money, and then you can, go from a good living to making some serious money. So, and all the money and all of my wealth, my entire career has been made off of day trading, basically. So, I'm starting out of university. This is really the only job that I've ever had after university. Yes, I do the Benzinga Premarket Prep. I've done some side things, but 95% of my net worth has probably been created from day trading.
That's good to know, because a lot of people will say that, day trading is for cash flow. Gotcha. And you need to really get wealth from investments and from long-term or from even swing trading. It's hard to make a living or make wealth through day trading. And I like to hear that, the majority of your, I've heard that.
So I should correct. Obviously, I have, made money. So I shouldn't say it's all from day trading. It would be from investing as well. But the original money that I make day trading. So what I basically have is two accounts. I have a trading account, which I day trade, a little bit of swing trading in. And then I have a long-term investing account where I, if I'm, my trading account gets, high enough where I'm comfortable with it. Obviously, I've got to take money out to live because this is where I'm living off my trading. So I'm always extracting some money from my trading account. And then, anything excessive that I don't need in my trading account, I would then put over into my long-term investing account and then invest in stocks that I believe in. And obviously, a lot of, them have grown, those stocks have grown over time. I think I bought Google 12 years ago. So, that stock, I think, my average cost basis on Google would be like $6,
Wow.
I think, it's at 112. So I mean, some of those have created wealth for me. So I should correct, it's not all been created from day trading, but it's been created from trading, which then became investing, which grew well. So I think you're right, Tracy. I think it is important to still, even as a trader, to do some long-term investing, because a lot of people will just ask me, why do you even bother with long-term investing? Why don't you just day trade it all? And I'm like, you could say that, but one, I've always been with Bright Trading, so I'm a prop firm, so I have Bright Trading money to trade with. So that makes it a little bit different. So obviously, I have their leverage, and the difference with a firm like Bright Trading is you're trading firm capital. So you can come in with $50,000 and access, up to $1 million. So it allows that trader to really, employ some serious capital into their strategies. Recently though, and I should say recently, I've just in the last 4 months, in the last month, I've just left Bright Trading actually, because I'm at a point where I've felt that one, I have a better tax structure if not through Bright Trading, but mainly I'm at a point where I've got enough money on my own that I don't really need the Bright Trading money anymore. So it allows me to a little more flexibility in what I do. So that's after 22 years with Bright Trading. It was a tough leave, but I actually have just left.
Wow.
Well, which is at a good point to be at, and I think that would be part of the journey, right? So
helps
people coming into the market to trade with.
I don't know how. Here's some people's flaw. They come in and they think, oh, I'm going to come in with $10,000 and I'll make $100,000 a year off it. Well, how? Not every year is going to be 2020 where stocks are going up tenfold. That is not realistic. I think 2022 was a real eye opener for a lot of those people that thought they could quit their day jobs because they have $10,000 in their account, and they turned it into 50 in 1 year. 2020 and the beginning of 2021 was a gift though. It was, it's not normal markets to just see that acceleration in stocks going from $5 to $50. That is not normal markets.
2021.
So I've always said, you think about good money managers making 10 or 12% a year. Well, if you're making 10 or 12% a year, you need $1 million to make $100,000. So I mean, I don't know how the majority of day traders can do it on a $10,000 or $20,000 account unless they join up with a firm like Bright Trading. Now, obviously, I've created some wealth over time, so I'm not in the same predicament that I was 20 years ago. But if you're starting, you probably need some type of prop firm to align.
I would say I think 2020 and 2021 is a very similar trap to when you first started talking to us, saying when you got into the market, you'd buy something, it would go, and sell it. And I think that in some way, I think positives and negatives to it. I think that 2020, 2021 introduced a lot of people into the stock market that otherwise probably would have never been there or had interest. But I think there's a little bit of a crutch from that where they got too comfortable too quickly. And I think they don't. I think not everybody. Some people will put the effort in. They'll go through classes. They'll learn. They'll read. They'll watch YouTube videos. They'll watch Premarket Prep. They'll really want to try to get into it. Others, it was just about the fast cash, and most of them, I think, probably lost a majority of what they did, and they might not ever touch the stock market again, right? So I think there's a positive and a delta to those type of markets, but the ones that hang in there, the ones that are in it for the long term and really put the work in, I think they're the ones in the long run, 10 years from now, 15 years from now, that's still around and still doing very well with it. You've been doing this long enough. How long do you think it takes for somebody to really grasp the market, really understand the market, where they could say, you know what, I could do this full time?
One, I think you've got to be able to go both ways. And this is, something that when you come out of a retail account, you think shorting stocks is just like the most scariest thing ever. And I think a lot of people actually believe, if you just talk, in different crowds, obviously retail crowds, or just talking to, people who are outside the market, a lot of people believe that short selling is just flat out un-American. Like you shouldn't bet against companies. But it's not about that. It's about efficiency. What short sellers bring to the market is efficient markets. I mean, bubbles are created in 2020 because of the absence of short sellers. It's not created. So you have a lot of people lose a lot more money, in stocks that, maybe like these GameStops or, or even like, other ones that really took off from the Reddit crowd. And the absence of short sellers, because people were scared to death to short those stocks, the absence of the short sellers allowed these bubbles to get a lot bigger than they ever should have. So, I mean, when stock's going straight up, shorts, a professional short is probably not going to be being interested in shorting the stocks. So, I mean, it's difficult, But I think you've got to be able to get past the notion that, oh, this is not, an American. It's about efficiency. And if you believe a stock is overvalued, you're just placing a bet and saying, on the short side that it's overvalued. And it might be from a fundamental basis, it might be from a relative basis. I'll do a lot of relationship-based trading, which we can get into in a minute. But I mean, it's all just, whatever your thesis is, you've got to be able to bet on it either going up or down. So if you're just long only, you're going to really struggle in a year like 2022. And I can tell you, my best years are the years that the market is doing the worst. So my best years, if I go through my history, best year was 2001, 2007, 2008, 2009, and probably 2021 was pretty good, the back end of it too. So, and the best was when the stocks are just tanking, because the stocks go down a hell of a lot quicker than they go up, and it's unbelievable on the short side. If you get the timing right, you can make a hell of a lot more money than you can on the long side.
Yeah, I think that's a great point. Now, your history has covered a vast number of cycles throughout the markets. And you've been through the 2008 real estate crash. You would have been through COVID crash. A lot of our listeners would not have experienced that type of market. What are some of the biggest lessons that you might have learned through? Let's talk about the real estate crash. What was the biggest lesson that you learned from that? Because I don't know. Would you have been prepared for it? Were you prepared for it?
You know what? No, nobody could be prepared for that. But it's like the writing is on the wall in a lot of this stuff, and people just ignore the writing. And I think I actually do well overall, because I'm just, cognizant to like what is happening overall here. And I can remember, I take you back to the financial crisis, and my best trading year was 2008. And I can remember I made a bet, and it was against a preferred stock of Bear Stearns. And I can remember talking to my wife even about it, and it was a sizable bet. But the preferred stock of Bear Stearns was trading at par. This was in 2008. It was $25. It was trading at par. And if you trade preferred stocks, they're often the par on them is $25. And I remember the yield was like 6.25%. So there wasn't a lot of borrow costs back then. It just wasn't like it is now. So it wasn't that expensive to carry that position. I can remember having this conversation with my wife, and not that she's a trader, but just throwing, I talk with her every once in a while just because you're thinking out loud. And I remember saying, I don't know if Bear Stearns, I don't think it's probable that they go down, because it was already writing on the wall. We'd saw Lehman Brothers, and just to set it up, so this wasn't like at the beginning. This was kind of, a little ways into, nothing had started, but Lehman Brothers had fallen from, well over $100 to probably 50. Bear Stearns had went the common stock from like probably well over $100 to I think it was $80. So it was still, well before the collapse, but it was still to come. And I can remember making that bet and saying that, you know what, I just short this preferred stock, and I really have, my upside risk is really the 6.25% dividend that I got to pay out. But, if so, it's maybe not probable that it's going to, I said this to my wife, it's not probable that Bear Stearns is going down, but it's possible. And I'm like, if it goes down, I'm like, this preferred stock is going to collapse. And we're talking about a preferred stock that had $25, if you looked at it for years, just trading around 24, 25, 24, 25. And then so I placed a huge short position on that. And literally 3 weeks later, the preferred stock chart looks like this. It falls off a cliff. And that was when the Lehman Brothers was going down, and we know Bear Stearns ended up going down to $2, eventually got bought out by JP Morgan for 10. But everything had just collapsed. And that Bear Stearns preferred stock went from 25 to 12 in about a week. And I was probably maybe my best trade ever. I was short, and I didn't take it all in by any means. I started covering when it got to like 21, 20, 19, taking it in because I was like, this is just, I was listed 6.25, so I'm trying to make it 20 in like 3 weeks. I'm like, my timing on this was, I was about 2 weeks early, but it was a nice setup. So, and especially after watching the common fall 50%, the preferred hadn't responded yet. And then I started shorting preferreds all over the place. And then it was just getting into stat arb too. I can remember in 2008, some preferreds would open down, some preferreds were looking up. I was just doing basic arbitrage on different series of preferred stocks. So, which could take us all in the relationship-based conversation. But yeah, so, it's all about, possibilities, and you're trying to figure out, is this possible? Isn't it possible? Or is the market, pricing it all in? there's this notion that the market is efficient market hypothesis, that it prices everything in. And I will tell you today, from my 22-year career, the market is actually the opposite. It prices nothing in. The market is made up of very uninformed participants that know almost, as a group, as a whole, it doesn't know a hell of a lot. So that's why I'm able to extract alpha from this market, because I'm just trying to figure out, where are the inefficiencies? What is the market not looking at? Today, I'll tell you right now, the market is not looking at the China situation. It's not looking at, the Pelosi situation. That is the next catalyst. And obviously now we're going, I don't want to just, date this to this right now, but right now the issues here in the markets is not pricing in this again. So, the market is failure. The market's failure to price in all information that is public and easily to read is probably why astute traders or smart traders or people who are just doing their homework can extract alpha from it.
That's a great point.
Long-winded answer. I don't remember where we started.
No.